Hey guys, SGT here, and I haven't had Jeff Nielsen on the line in far too long. Jeff is now the Senior Precious Metals Analyst over at Silver Gold Bull, and as you recall, he's one of the founders of Bullion Bulls Canada. Jeff, welcome back.
Always a pleasure to be here, Sean.
The market as we know it is about to go over the edge of the cliff. I think we're seeing the entire Western banking system being flushed out. That's what Steve Quayle's London source is saying. He's saying, quote, the whole house is being purposely burned to the ground. We're seeing banking glitches all over the planet where people can't get access to their cash. RBS's NatWest being one of them. And that whole debacle began just 3 days after the RBS downgrade. We've got hacking of banks happening. We've got the LIBOR scandal, which now rivals the mortgage-backed security fraud. And now recently, PFG Best announced $220 million of segregated customer funds is missing. What's your take on what we're seeing?
Well, I totally agree with you that, that things are coming to a head here. And, I mean, it's, not only the quantity of items that are hitting the news, but just the massive scale. I mean, who can even wrap their heads around what a $350 trillion fraud actually means? And, of course, that's what, the LIBOR scandal is. And then, we have these bankers now, claiming that literally their fraud is too big to fail. They're saying that these fraud-tainted LIBOR contracts must be honored because, the whole financial system would fall apart if these contracts were invalidated. But, the fact is that it's a matter of law. One of the fundamental principles of our legal system is that any contract tainted by fraud is instantly and automatically null and void. So, it's not a matter of these bankers getting to choose, whether these contracts should be enforced or not. I mean, as a matter of law, they're already null and void, and thus continuing to enforce these fraud-tainted contracts is in itself another criminal act each and every time it's done.
Well, I'm glad you hit on that too big to fail moniker because, I have a real issue with that language because you know what, Jeff, the fact of the matter is if we look at JP Morgan alone, they're too big to succeed. You're talking about a company with $70 trillion in derivatives exposure, tipping over the edge. There's no way that the world can save just that one company. And here's the thing, Jeff. When we talk about all of this paper fraud, I want to cite an email I just got from a reader who writes, and I quote, last night I received an email, he writes, from a former colleague of mine who has lost faith in his silver investment I encouraged him to make, and he said, only an uneducated idiot like yourself could never admit that you've been wrong. And he was talking about silver. So this guy is depressed because he bought physical silver, and, he paid more than it's worth now. But, Jeff, what people don't seem to understand is if people are having difficulty getting access to their fiat paper, as we see happen with these banking glitches and ATMs that are closed down in Europe, et cetera, how precious is 1 ounce of physical silver? I mean, that's what people have to understand as we see this paper Ponzi literally starting to melt down before our eyes.
And, it's such a stark choice now because, gold and silver have this literally 5,000-year track record of maintaining value, of consistently preserving wealth and representing the ultimate in financial security to people. Meanwhile, we have all these various forms of the banker's paper which have an equally unequivocal history of always going to zero. And, of course, the dichotomy here is you have the bullion holders and the people, laughing at them where, the worst thing that can happen is that the price of their bullion can temporarily go down, for a short period of time. Meanwhile, on the other side, you have the paper holders who every day they hang on to their paper are risking a permanent 100% loss, either through the currency, simply being taken out of circulation or, massive bond write-offs as we've already seen in Greece, or of course, plundering of accounts now as well.
Yeah, that's right. And we know that with LIBOR, the banks are acting as a cartel, banks working together to manipulate rates. The same thing is being done by the cartel to manipulate the paper prices of gold and silver. If people can't see that, then they deserve to sell their metals low and lose everything because it's so obvious at this point, Jeff.
Well, I tried to get that message across in a commentary not too far back, which I titled my last forecast on gold and silver prices. And the message there is, I've even given up trying to make short-term or even, medium-term predictions on the price for these metals. And it's, not because, the people in this sector have suddenly become less competent at appraising the market. Instead, it's a matter of these paper currencies have become so unstable and our markets have become so far detached from reality that paper prices are now meaningless. What people really need to do is to get into a total paradigm shift and to stop pricing the assets of the world in terms of the banker's worthless paper, and to start pricing these assets in terms of gold and silver. How many ounces of gold does it take to buy a house? How many pairs of shoes can you buy with an ounce of silver? And that's the way we should start thinking, comparing assets with real value to the consumable goods that we want to buy.
You're absolutely right. And I want to let people know, too, that I continue to purchase physical silver and some gold every chance I get. I just recently bought a 1 kilo Ford bar, and I paid around $35 an ounce for it, Jeff, deliberately, because I've always wanted one of those bars. They're beautiful. To me, the difference between paying $35 and $28 an ounce, I don't care. It's cheap. I wanted it. I don't care. Do you understand what I'm saying, Jeff? I mean, even at today's prices, at $35, $40, $50 an ounce, silver is so inexpensive as we see this paper Ponzi blow up.
Well, if people accept my own analysis of this market, what we're going to see down the road is basically a zero behind the current silver prices. And so, yeah, whether it's $35 or $30 or, 27 something right now, I mean, these are all fantasy prices. And instead of people looking at this as somehow indicating, risk in the silver market, quote unquote, what they should look at it as is, the ultimate sale on the ultimate valuable asset.
That's right. It's a subsidy. Our purchases are being subsidized by the criminal cartel, and that is the absolute punchline to the joke. As has been said, it's the Achilles heel. Physical silver is the Achilles heel to the criminal banks, and it's true.
And, at the same time, my own, punchline for my audience is that essentially the bankers are working for us. By them suppressing this market, it allows us to continue to accumulate our own bullion holdings at phenomenal prices. But, it also ensures that these markets never, ever are allowed to spiral into, true bubble status, as we've seen with real estate and all sorts of other markets. And so, in a weird sort of way, this permanent suppression is providing us with a real sense of security where we can go and buy fearlessly and never have to worry that we're, getting in at a price that we're going to regret down the road.
And as has been said many times before, Jeff, you know this, when you're over the target, that's when you're taking the most flack. I want to talk about your recent article, The Continuing Mystery of the U.S. Treasuries Market. Now, Jeff, as you know, there are some sacred lambs that just can't be touched in this current paradigm, and one of those is the sanctity of the U.S. Treasury market. Why don't you take it from there, because you wrote this article and then you were pretty much immediately attacked by Joe Weisenthal of Business Insider.
Normally, I try not to be too thin-skinned about these things, but, what sort of offended me and made me feel that I had to respond to this was the criticism was essentially so hollow. It was just this, one-page piece, and most of it was contained with a chart and my own quotation. So, there was practically nothing to it. And yet it was, essentially ridiculing me as if, my arguments were so absurd that they didn't even, require any further degree of analysis. And, the thing is, what is totally missing anytime people try to explain the U.S. Treasuries market is simple. Where are the buyers? We go back to the final years of the Bush regime, when the U.S. funding requirements suddenly leaped up from below $500 billion per year to $1.5 trillion per year. That's a tripling of funding requirements, and at the exact same time, China, the biggest buyer of treasuries, has gone, all the way down to zero in their treasuries buying. So, it's just a simple matter of arithmetic. There would seem to be no possible way to fund this market. And then, of course, exactly as this change was taking place, we have the Treasury Department itself deliberately changing the procedure for Treasuries auctions so that nobody can tell who is buying these bonds any longer. And, what more indication do you need that some, chicanery is at place? This is like, a cheap magician who, tells his audience he's going to perform some great feat of magic and, then turns the lights off for a couple of minutes and then, boom, the lights go back on and goes, voila, the bonds are gone. It's an obvious Ponzi scheme, and certainly Mr. Wiesenthal's criticism did nothing at all to change my mind or weaken my own arguments.
Yeah, you write in your article that he directly implies that Treasuries buyers will soon begin paying the U.S. government for the privilege of lending it money. And as the government borrows more and more money, its lenders will not only infinitely increase the amount of money they're willing to lend the U.S. government, but they will literally pay the U.S. government an infinite price for that privilege. And you know what the punchline of this one is, Jeff, is that, again, it's paper. What are these things but paper, promises to pay 3 years, 5 years, 30 years out?
Thanks for watching Part 1. Don't miss Part 2, and be sure to visit sgtreport.com for all of my original content and the most important daily news. Thanks for watching.